In the vast majority of marriages, one spouse will spend many years of their life without the other. Women, on average, outlive men by about 5 years, so more often than not, it's the wife who is left behind. But not always, and everything I'm going to say today applies to a surviving husband just as much. The point isn't who goes first. The point is that one of you almost certainly will be left to carry on alone, and the choices the two of you make now, together, while you're both still here, will decide whether that person is left secure and cared for, or left frightened and struggling in the very worst moment of their life. So this video is, in a strange way, a love letter. It's built from the hardest lessons that real widows have shared, the things they said through tears they wished their husbands had done before they passed. Not because their husbands didn't love them, they did, but because nobody sat them down and told them what actually matters, and so some things got left undone, and those undone things became a second grief, stacked on top of the first. I'm going to give you 10 of them, and I want to be clear about who this is for. If you're the spouse who handles the money, and in many marriages of this generation that's the husband, this is your to-do list, and every item on it is a final act of love you can give while you still have time. And if you're the spouse who doesn't handle the money, this is your permission and your nudge to gently insist on these conversations, not to be morbid, because it's kind, because the greatest gift you can leave someone is not just your love, it's your love organized so that on the day they can barely think straight, everything they need is right where they can find it. Let me give you someone to hold on to through all of this as an example. I'll call the wife Carol and her husband Jim. Jim was a good man who handled everything: the bills, the accounts, the investments, the taxes. Carol trusted him completely and never had to think about any of it. And when Jim passed suddenly at 74, Carol discovered that his love hadn't been organized. She spent the following year not only grieving her husband, but frightened, confused, and alone in a financial world she'd never been shown. Some of what happened to Carol was unavoidable. Much of it wasn't. Let's walk through the 10 things that would have changed everything for her. Number 1, and it's the one that quietly reshapes a widow's entire financial life, so please understand it. When one spouse dies, you don't keep both Social Security checks. You keep the larger of the two. The smaller one simply stops, forever. Let me make that concrete, because it's enormous. Say a husband collects $2,400 a month, and his wife collects $1,800. Together, that's $4,200 coming into the house every month. When he dies, she keeps the larger check, the $2,400, and her own $1,800 disappears. Her household Social Security income doesn't dip a little. It drops from $4,200 to $2,400 overnight. That's roughly $19,000 a year. Gone, at the exact moment she's most vulnerable. Now here's what Jim wished he'd known, and what you can act on right now. Because the survivor inherits the larger of the two checks, the most powerful thing the higher earner can do is delay claiming Social Security as long as possible, ideally to age 70. We've talked about this on the channel. Waiting grows your benefit by about 8% a year. But here's the part most people miss. When you're the higher earner, delaying isn't just about you. That bigger check becomes the survivor benefit your spouse will live on, possibly for a decade or more after you're gone. So delaying your Social Security is, in a very real sense, buying life insurance for your widow, permanently raising the one check that will carry her. If Jim had delayed to 70 instead of claiming early, Carol's survivor check would have been hundreds of dollars larger every single month, for the rest of her life. That single decision echoes for years. Number 2 is the mistake I most wish I could prevent, because it is usually permanent, and it has left more widows in poverty than almost anything else: the pension election. Here's the trap. If your spouse has a traditional pension, at retirement they have to make a choice, and it's often irreversible. Option 1 pays a higher monthly check for as long as the retiree lives. But when they die, it stops completely, and the surviving spouse gets nothing. Option 2, called a joint and survivor election, pays a somewhat smaller monthly check, but it continues to pay the surviving spouse for the rest of their life after the retiree dies. Now imagine a husband, wanting to bring home the biggest possible check, chooses that first option, the larger single life payout. It feels generous. It feels like taking care of his family. And then he dies, and his widow discovers that the pension that was a huge part of their monthly income has vanished entirely. This happens, and it is devastating, and by then it cannot be undone. So here is the lesson in the strongest terms I can offer. If your spouse has a pension, find out today which option was chosen or will be chosen. In most cases, protecting your spouse with the joint and survivor option is worth the smaller monthly check, because it guarantees they won't be left destitute. The law actually requires a spouse to sign a waiver to give up those survivor rights. So if you're the spouse, never sign away your survivor benefit without fully understanding what you're giving up. This one choice can be the difference between a comfortable widowhood and a desperate one. Number 3, keep the life insurance in force and make sure it's enough. Life insurance exists for exactly this moment, to replace the income and cover the gap when someone dies. But here's what happens in real life. People let term policies lapse, or they cancel coverage to save on premiums as they get older, thinking they don't need it anymore. And sometimes they're right. If you're self-insured, with plenty of assets, you may not need it. But think about the 2 hits we just discussed: the lost Social Security check, and if it wasn't protected, the lost pension. Life insurance is one of the cleanest ways to fill that hole. A death benefit arrives tax-free, quickly, right when the survivor needs cash the most. So the action here is simple. Know what life insurance you actually have, whether it's still in force, and whether the amount would truly cover the income your spouse would lose. And critically, make sure your spouse knows the policy exists and how to claim it. Widows have missed life insurance payouts entirely simply because they never knew the policy was there. Which brings us to the next one. Number 4, make the master list the single document that says where everything is. If you take only one practical thing from this entire video, let it be this. Sit down and create one document. Call it the everything list. That inventories your entire financial life. Every bank account and where it is. Every investment and retirement account. Every insurance policy. The pension, the mortgage and any debts. The deed to the house, the car titles. The name and number of your financial advisor, your accountant, your attorney. The location of the safe deposit box, and its key, because here's Carol's nightmare, and it's so common. After Jim died, she didn't know what they had. She found statements from accounts she'd never heard of, and worried for months that there were others she'd never find. She didn't know who his advisor was. She couldn't locate the life insurance policy. She spent the worst year of her life playing detective through her husband's filing cabinet. A single sheet of paper, updated once a year, kept somewhere she knew to look, would have spared her all of it. This costs nothing but an afternoon, and it is perhaps the kindest thing on this list. Number 5 is the modern one, and it's becoming one of the biggest sources of anguish. Share the passwords and the digital access. We live behind locked screens now. Think about it. The phone with a PIN only he knew. The email account that every other account resets through. The online banking, the brokerage login, the bills that come only by email. And the cruelest modern trap, 2-factor authentication, where the security code gets texted to his phone, the phone that's now locked and that the widow can't get into. Carol was locked out of her own financial life because everything routed through Jim's phone and Jim's email, and she didn't have the codes. So here's what to do. Make a written list of your important passwords, or better, use a password manager and make sure your spouse knows the one master password to it. Know each other's phone pins. Make sure you're both on the phone plan so a phone can be accessed or transferred. And know the password to the primary email account, because that's the master key that unlocks almost everything else. Keep that list somewhere safe and known. This isn't about distrust. It's about access when it's needed most. Number 6, fix how your accounts are titled and check your beneficiaries, because this decides whether cash is available or frozen. When someone dies, any account in their name alone can be frozen and may have to go through the court process called probate before the survivor can touch it, a process that can take many months. Imagine needing money for the funeral and the mortgage and being locked out of your own household's accounts because they were only in your late husband's name. It happens constantly. The fixes are simple and worth doing this week. First, make sure the surviving spouse's name is on the essential accounts. A joint checking account, for instance, passes immediately to the survivor with no probate, so there's always accessible cash. Second, and this is the big one, check the beneficiary designations on every retirement account and life insurance policy. These pass directly to the named beneficiary, skipping probate entirely, but only if they're filled in and current. I've seen retirement accounts and life insurance still naming an ex-spouse from decades ago because nobody ever updated the form. The beneficiary form overrides your will, so an out-of-date beneficiary means the wrong person inherits, and there's often nothing anyone can do. Check them. Fix them. It takes 15 minutes and it prevents catastrophes. And there's a special reason this matters so much for retirement accounts specifically, the IRAs and 401ks, that most people never learn. When a spouse is named directly as the beneficiary of a retirement account, they get a unique privilege that no one else gets. They can roll that account into their own IRA and treat it as if it were always theirs, letting it keep growing tax-deferred with withdrawals stretched over their whole lifetime. But if the account isn't set up that way, if it names the estate, or an out-of-date beneficiary, or gets tangled in probate, the survivor can lose that option and be forced to drain the account much faster, triggering a big avoidable tax bill in the process. So it isn't enough that the money exists. It has to be pointed directly at your spouse so they can take the gentle, tax-smart path. Confirm that your spouse is the named beneficiary on every retirement account. It's a 5-minute check that can protect years of tax-deferred growth. Number 7. Get the basic legal documents done: the will, the power of attorney, and the healthcare directive. At a minimum, you both need a will so your wishes are clear and the court isn't left to decide. If you own a home, ask an attorney whether a living trust makes sense to spare your family probate. We did a whole video on that. But here are the 2 documents people forget, and they matter while you're still alive. A durable power of attorney, which lets your spouse manage the finances if you become incapacitated. Because there's often a period of decline before death when someone has to pay the bills and make decisions, and without this document, your spouse may have to go to court to get that authority. And a healthcare directive, naming who makes medical decisions and stating your wishes, so your spouse isn't left agonizing and guessing in a hospital hallway. Jim had none of these, and when he had his stroke, Carol spent his final weeks fighting paperwork instead of holding his hand. Number 8, and this is the quiet one that underlies half the others: bring your spouse into the money while you both still can. In so many marriages of this generation, one person handled everything financial and the other simply trusted them. That trust is beautiful, but it can leave the survivor completely unequipped. Carol had never paid an online bill, never spoken to their advisor, never made an investment decision in 45 years. Suddenly, she had to do all of it, while devastated. So the gift here is knowledge, shared in advance. Have what I call the "if I'm gone" meeting. Sit down together and walk through it all. How the bills get paid, where the money is, and how it flows. How to log in. Then, and this is important, meet your financial advisor together as a couple so the survivor already has a trusted relationship and a face to call, not a stranger to find in a panic. If you don't have an advisor and your situation is complex, this is a good reason to establish a relationship with a fee-only advisor now. Together, the surviving spouse should never be meeting the most important people in their financial life for the very first time at the funeral. Number 9 is the tax ambush almost nobody sees coming, and it has a name: the widow's penalty. This one is subtle, so stay with me, because understanding it can save a survivor thousands of dollars a year. Here's the cruel mechanic. The year your spouse dies, you can usually still file your taxes jointly, but the very next year, the surviving spouse has to file as a single person, and the tax code treats single filers far more harshly. The standard deduction is cut roughly in half. The tax brackets are much narrower for 2026. The 22% bracket starts at about $100,000 for a couple, but at just over $50,000 for a single person. More of your Social Security becomes taxable, because the thresholds for singles are lower. And even the Medicare surcharge, called IRMAA, kicks in at half the income level. About $109,000 for a single person versus $218,000 for a couple. Put it all together and you get something that feels deeply unfair. The survivor often has less income but pays a higher percentage of it in taxes. Same house, same savings, less money coming in, and a bigger tax bill. That's the widow's penalty. Now here's the good news, and why I'm telling you while you're both still here. The window to fix this is now, during the years you're still filing jointly with those wide brackets. This is exactly when smart couples do Roth conversions, moving money from a traditional IRA into a Roth, paying tax now at the lower joint rates so the survivor can later withdraw it completely tax-free and never face those forced heavily taxed withdrawals alone. It's when you coordinate that higher earner delaying Social Security. It's when you sit with a tax professional and actually model what the survivor's tax picture will look like and plan around it. Every dollar you shift into a tax-friendly place while you're both alive is a dollar of relief for the one who's left. This is planning that has to happen in advance. Afterward, it's too late. And while you're having that conversation about taxes, retirement accounts, and what the surviving spouse would actually be left with, this is also a good time to look at how the retirement money itself is positioned. Because protecting your spouse is not just about naming beneficiaries and signing the right documents. It's also about making sure the money you've built over a lifetime is not all exposed to the same risks, the same market swings, the same inflation pressure, the same paper assets, and the same uncertainty about what the dollar will buy 10 or 20 years from now. That does not mean you should panic. It does not mean you should move everything around. And it definitely does not mean gold is some magic solution. But some retirees do choose to diversify a portion of their retirement savings into physical gold through a gold IRA because they want part of their nest egg outside the usual stock and bond system. So if you have money in an old 401k, IRA, or retirement account, and you want to understand whether physical gold belongs anywhere in your retirement plan, I'll leave a link below to a free gold IRA information guide. It explains how physical gold can be held inside a retirement account, how rollovers work, what the IRS rules are, and what questions to ask before moving any retirement money. Just click that link, fill in your information, and you'll receive the free guide in your email, along with a complimentary phone call so you can get your questions answered for free. Now, let me put real numbers on it, using Carol so you can see how sharp this is. While Jim was alive, they had about $85,000 of income and filed jointly, sheltered by the couple's larger standard deduction and those wide brackets. Their tax bill was modest, and they were comfortable. After Jim died, Carol lost his smaller Social Security check and some of their income, so she was living on roughly $65,000, noticeably less money. And yet, filing as a single person, with the deduction cut nearly in half and the bracket squeezed, a chunk of her income that used to sit in the 10 and 12% range now landed in the 22% bracket, and more of her Social Security became taxable. Less income coming in, a bigger share going out in tax. That's the widow's penalty in dollars. And had they done a few Roth conversions in those joint filing years, Carol could have pulled that money out tax-free later instead of being squeezed on it every year for the rest of her life. And number 10, this is the one that isn't really about money at all, and it may be the most important of all. Leave the roadmap and leave the letter. Write down your wishes, what kind of funeral or service you want or don't want, whether you wish to be buried or cremated, which hymns, which readings, if any, because otherwise your grieving spouse has to guess at the most tender decisions. Terrified of getting it wrong? Spending money they can't think clearly about? Writing it down is one of the most loving things you can do. It lifts an impossible weight off their shoulders in their darkest week. Leave the list of who to call: family, friends, the attorney, the advisor, the insurance company, the pension office, the Social Security office. Leave instructions for the practical things only you know: where the spare key is, how the sprinklers work, which neighbor to trust, when the property tax is due. And then, if you can, leave the letter, the one that isn't instructions at all, the one that says what they meant to you, and that you're at peace, and that you want them to go on living and laughing and being happy. Because in the hardest nights that follow, when the practical work is done and the house is quiet, that letter will be worth more than everything else on this list, combined. Widows have told me that a note in their husband's handwriting became the single most precious thing they owned. Before I gather these together, I want to speak directly to something, because some of you watching are not planning for this. You're living it right now. If you've recently lost your spouse, let me give you a few practical anchors for these first hard weeks, because these are lessons widows share too. First, order more copies of the death certificate than you think you'll need, 10 or 15. Nearly every institution, every account, every agency will demand an original, and running back for more is a miserable errand when you're grieving. Second, and I mean this with all my heart, Do not make any big, irreversible financial decisions for at least the first several months to a year if you can possibly avoid it. Don't sell the house right away. Don't hand a lump sum to anyone. Don't let a salesman rush you into an annuity or an investment. Grief is not the state of mind to make permanent choices in, and the people who prey on new widows know that. Give yourself a full year of not deciding anything you don't have to. Third, notify Social Security promptly. Often the funeral home reports the death, but confirm it, and ask specifically about your survivor benefit and the small one-time death payment. If your husband was a veteran, contact the VA about survivor benefits, which we've covered in another video. Notify the pension plan, contact the life insurance company to file the claim. And when tax time comes, get a professional or a free program like AARP Foundation Tax Aid to help you, because that first single filer return is exactly where the widow's penalty shows up, and a good preparer can help you handle it right. And here's a reassurance about the tax pain I described. There's a form called SSA 44 that lets a survivor ask Social Security to reconsider those Medicare surcharges after a spouse's death, because your income has changed. Ask about it. There are more mercies built into the system than most people realize. You just have to know to reach for them. One more hard-won lesson for those first months, because it catches grieving families off guard. Protect your late spouse's identity. Sadly, criminals watch the obituaries, and identity theft of the recently deceased is a real and cruel thing. So send a copy of the death certificate to the 3 credit bureaus, Equifax, Experian, and TransUnion, and ask them to place a deceased, do not issue credit flag on the file. Be wary of anyone who calls claiming your spouse owed a debt you've never heard of. Scammers prey on the guilt and confusion of new widows to collect on debts that aren't even real. And you generally are not personally responsible for your late spouse's individual debts just because you were married. So before you pay anything, especially from a credit card in their name alone, talk to an attorney. Don't let anyone frighten you into paying a bill that was never yours. Now, if you're still planning, let me help you find where to start, because you can't do all 10 this week. If in your marriage one person handles absolutely everything and the other is in the dark, start with number 8 and number 4. Bring the other spouse in and make the master list. That's your biggest vulnerability. If your spouse has a pension and hasn't retired yet, make number 2 your first call, today, because that election is the one you can't undo. And if you're both fairly organized already, go to number 9. Sit down about those Roth conversions and the survivor's tax picture, because that's where careful couples still leave thousands on the table. Find the one that fits your situation and begin there. Let me gather these together, because I know it's a lot. The 10 things. Understand and maximize the Social Security survivor check by having the higher earner delay. Protect the pension with a survivor election. Keep adequate life insurance in force and known. Make the master everything list. Share the passwords and digital access. Fix your account titling and update your beneficiaries. Complete the will, the power of attorney, and the healthcare directive. Bring your spouse into the money and introduce them to your advisor. Plan ahead for the widow's penalty with Roth conversions while you're both alive. And leave the roadmap in the letter. Now let me be honest and careful with you, the way I always am. I'm not a lawyer, an accountant, or a financial advisor, and none of this is personalized advice for your situation. The tax figures are current for 2026, but they change, and everyone's circumstances, your assets, your state, your family, are different. What I've given you is the map of the conversations to have and the questions to ask. The answers should come from sitting down with a qualified estate planning attorney, a tax professional, and a fee-only financial advisor who can look at your actual life. And please know there is free, trustworthy help too, your local area agency on aging. And programs like AARP can point you to resources at no cost. And if you are watching this as a widow or widower right now, already on the other side of this, please don't hear any of it as a reproach, to you or to the one you lost. Some of these things can still be handled after the fact, and it is never too late to get organized and get good help. Be gentle with yourself. You are doing something hard and doing it bravely. But if you're watching this as a couple, with time still on your side, then here is what I hope you'll do. Don't file this away as something to get to someday. Pick one item, just one, and do it this week. Check the beneficiaries. Start the everything list. Ask about the pension election. Book the appointment. Because these things don't get done in a single grand afternoon. They get done one small, loving act at a time. I began by calling this a love letter, and I'll end there too. When we love someone, we say we'd do anything for them. This is the anything. It isn't dramatic. It's a signed form, a shared password, a delayed Social Security check, a letter in a drawer. But it is love made practical. Love that keeps working and keeps protecting long after you're able to be there yourself. It is the last quiet way of saying, I thought about you, I planned for you, I made sure you'd be okay. Give that gift while you can. It may be the most important one you ever give.